Good morning, hello and welcome to ET Now's Buy Now, Sell Now with me, Varun Hiremath, and along with me, Karanya Rao. Karanya, I think it's the first day we're anchoring together after your long sabbatical of sorts, so welcome back to the show and great to have you back on BNSN. With that being said, let's also get a move on and talk about the market rally that we're witnessing right now. 11,500 has been firmly reclaimed on the Nifty. Tech, IT and metal stocks are leading the surge this morning. All your large cap IT stocks are really surging with the select metal basket. Talking about the larger IT companies, TCS definitely in focus today. We're hearing that on October 7th, a special meeting will be conducted where a large buyback is likely to be conducted at that company, and that's got shareholders very excited. The stock opened up with a 4% gain this morning. We then have VC community looking very closely at opportunities in the Indian tech space, and that's coming from numerous sources. It seems that that market is really heating up and you're likely to see a lot of M&A activity there as well. Then moving forward, talking about investment in M&A activity, we have Reliance in focus like it has been almost every other week. GIC and TPG, the latest to join the Reliance retail bandwagon, valuing the firm at 4.28 lakh crores, which is a reiteration of previous investments. There's no premium here, but nonetheless, a large tune to the $1 billion between both of them. So Reliance fundraising continues. We then have a mixed Q1 for Vedanta, where revenues have slid but margins have expanded. So that's also in focus today. We have the moratorium case also that's going to be important today. The SC order on interest waiver is awaited, and we're likely to hear a final judgment on that one today. And then finally, as far as headlines are concerned, the GST tussle, all eyes on the GST Council meet, where states' compensation woes are very much on the agenda. Back to you, Karanya.
In the meantime, markets are looking very, very upbeat. You have the Nifty hovering around the day's high, firmly above 11,500 levels with a gain in the excess of 100 points. You have Sensex gaining more than 430 points as we speak. Broader markets relatively lackluster. I would say mid-cap index is just trading along the flat line. Definitely in the green, so that's a silver lining there. Small cap index is up about 0.5% in trade. As far as sectoral performers are concerned, barring Nifty Auto and Nifty Media, all the other indices are firmly in the green. Look at the way Nifty Bank, Nifty PSU Bank Index, private sector lenders, all of them have gained momentum in trade. Nifty Bank, in fact, has surged more than 350 points as we speak. Nifty I.T, another big gainer in trade. In fact, the strongest sectoral performer as well, up almost 3% as we speak. And, you know, reflecting a similar trend as far as the Nifty 50 individual gainers are concerned. You have banks and ITs taking the center stage today. TCS up 5.5%, Tata Steel up 5%, Wipro, Infosys, in ICICI Bank, Hindalco, IndusInd Bank. So metals, private sector lenders and IT, these are the ones that are really standing out in trade as we speak. Let's pull up the buy now, sell now stock cloud as well real quick to understand which are the ones you should be focusing on quite closely. First up has to be TCS, the top gainer on the benchmark index as well on back of that buyback news. We'll of course get you more details through the course of the show of the buyback and the math, etc. You have IndusInd Bank, ICICI Bank, Axis Bank, and even an SBI gaining quite smartly in trade on the back of that moratorium development, where the government seems to have agreed to waive interest on loans of up to 2 crores during a moratorium. So that's a big news that's moving the banking stocks big time. Bharat Forge, another name from the broader markets that's hogging the limelight on the back of North America truck sales. It's in fact the top gainer on the Nifty Auto Index as well. You have an HCL Tech as well, apart from the likes of TCS, Wipro and Infosys, which is also gaining quite smartly. They in fact had announced an alliance, or rather the expansion of their alliance with IBM to help organizations with digital transformations. That's some corporate development coming there for HCL Technologies. Overall, the IT pack looking very, very upbeat as well. Angel Broking debut on the Lal Street, stock in focus. It's made its entry on the bourses today. There's also some Mid-cap stocks like Apollo Pipes, that's in focus. They gave out their Q2 FY21 update over the weekend. Sales volume has increased 19% compared to the same quarter last year. Lastly, you also have an ITI, a stock that we don't talk about too often. They've also garnered a contract from the Defense Ministry on the 1st of October. Its supply and establishment of ASCON Phase 4. Total contract value is almost 7,800 crore rupees. So a small cap stock, or rather a mid cap stock, ITI Limited, very much hogging the limelight. Back to you, Varun. These were the stocks that we wanted to flag off on BNSN Stock Club.
Thanks for that, Karanya. Whole host of stocks in focus there, but time to shift gears a little bit and talk technical and fundamental with Kunal Batra and Saurabh Jain. Good morning. Thank you both for taking out the time to chat with us, as always. Kunal, coming to you first. We're looking at a very positive day in the markets and we've reclaimed 11,500. Given that the climate seems to be in favor of the bulls, what's your high risk and low risk idea this morning?
Good morning. First of all, I think it's a fabulous day for the markets. Not just a fabulous day, but I think the fabulous last 5-6 trading sessions for the indices, and particularly I think the resurgence of Bank Nifty is the standout feature of this rally for the markets. And I think, hands down, I think Bank Nifty has done exceptionally well from those, clutches of at one point breaking the 20,000 mark. We are now substantially higher above those 22,000 levels. We are now in touching distance of breaking that 23K mark as well on the Bank Nifty. So this seems to be a very strong resurgence on the Bank Nifty. Particularly, I think what this move does is it opens up the the mid cap end of the market as well as gives many stocks room to try and perform and convert their short-term breakouts into some signs of trends. So I would indicate 2 buy calls, and they would be more broad-based. The first one is about Unichem Labs. Now it's a very interesting chart. On the daily time frame, the stock is forming a classic bullish, flag pattern. It's been trading with a consolidation since last 1.5 odd month. I think the month of September and start of October so far. We've seen the stock has been grinding through a bit of a range, but the volumes, the prior patterns, all of that indicate that the breakout should happen pretty soon on Unichem Labs on the upside. So I will term this as a slightly higher risk trade. Would suggest a buy with a positional target of 300. So that should be an upside of almost 15% from current levels, and stop loss could be kept at 242 mark. The second would be a buy on Sun TV. I think again a very interesting chart. Long-term patterns indicate that Sun TV has confirmed breakouts on the indicators on the weekly and the monthly time frame charts, and I believe that could probably indicate that the stock should be a good buy on dips opportunity. So again, a relatively low beta stock. Would recommend a buy on Sun TV for targets essentially towards 485-490 range, and stop loss could be kept to 455.
All right, thanks Kunal for that. Saurabh, hi, morning. Let's talk fundamentals about the market as well. Now that we've concluded the second quarter and the earnings will start trickling in this week onwards. The up move that we've seen in the markets, could it be sustained, or do you foresee some volatility, especially on the back of how the earnings trajectory pans out?
I think volatility cannot be ruled out. I mean, the earnings will not be, similar pace. The two sectors which stands apart are the technology sector and the pharmaceutical sector. I think these two sectors will definitely surprise positively. And in fact, my first pick is from technology sector. It is a low risk call on the Infosys. We have a target of about 1,180. If you look at the last quarter earnings, you see that management was quite confident about the business prospects. They have given a guidance of about 0 to 2% revenue growth, and they have seen expansion in the EBITDA margins also. The margins, I think they would definitely meet the upper guidance of the margin guidance, close to 22%. The deal win was good in the June quarter, and I expect similar things to similar things to happen in the next few quarters. The digital revenue comprises close to 44% of their business total revenue, and it is growing at a steady pace of 25%. So we are quite optimistic. The second stock I'll be recommending is Jyoti Laboratories. We have a target of about 170. The company is focusing on the new products, and the company is a leader in its domain. They are largely focusing on the rural sector, and they they expect that the revenue contribution from the rural sector would increase from 40 to 45%. The Atmanirbhar Bharat program and the focus on the rural India, I expect these things to unfold very well for the company. So we have a target of about 170.
All right, so those were the picks as far as Kunal and Saurabh are concerned, both high risk and low risk. So I hope you all were tuned in. And it looks like a whole host of opportunities out there in the market today, given that the climate is in favor. But let's also take a look at some of the queries that our viewers have been writing into us and asking about. This morning we have Sahil Parekh from Mumbai, and he wants to know, he's asking three questions really. Is it the right time to invest in banks? Can I invest in small banks like IndusInd, or is it better to stick to the larger privates? Now, this is obviously in the backdrop of the interest waiver also happening today, which is a huge overhang now seeming to dissipate off the Bank Nifty. So, Kunal, I know you shared your optimism about Bank Nifty earlier, so I guess you can reiterate. But let's focus on the smaller versus larger private part. Where do you think lies greater value within the banking stocks?
See, I think so. There are two parts to the question. One is if it's from a specific front, stock specific front, then of course your bent has to be more towards large cap names. And the other part is that whenever a move begins or a new trend begins for any sector, so whether it's for example the IT stocks, the pharma stocks, we've seen so many of the other sectors managing to rally. You have to understand that there are two parts to every kind of trend. The first part is where the leaders of the or the dominant large cap players are the ones which take the baton ahead, and I think that's the first signal where you typically see signs of robust price performance coming in from ICICI banks and HDFC banks and those other quality large cap names. So if your anticipation is that you want to catch the first move, then I believe it's better that you start investing a major portion of your supposed investments in the large cap private sector banks. But eventually what happens is when the trend shapes up, the laggards or the mid cap ones or the small cap ones or the tier to large cap names, even these stocks will try and participate, and then there will be some bout of outperformance which happens into these names. Now we don't know how the Bank Nifty overall long-term trend could pan out, whether there is a recovery in the Bank Nifty, just a mild recovery, or whether this converts itself into a full-fledged long-term uptrend. Now, if the anticipation is that if it's just a short-term recovery, which could probably last for at least a couple of months, then it's better that you start, getting invested more heavily towards the large cap, banking names. And that's how you try and figure out that you look at the large cap outperformers. I think the likes of ICICI Bank, Kotak Bank, and HDFC Bank, rather ICICI Bank, HDFC Bank, and Kotak Bank in that order could be, your top picks amongst them. And then probably if you have some spare capital and you're looking to add couple of other high beta banking names, then probably IndusInd Bank could be the other stock which you can look at. Why not look at even an SBI at current levels of 190 approximately. So if you can add and diversify, well and good, but if you have restricted sum to be deployed, then I believe stick to large cap private sector banks.
Right. Saurabh, do you concur with Kunal's view on this? Do you also believe that one should look at large cap private sector lenders right now, or are there any select banking stocks, the small cap ones, that you see value in?
Yeah, I totally concur with the Kunal's view. I mean, if you look at the larger private sector bank, they have a good balance sheet. Recently, many of the banks have raised money for the likes of Axis Bank and ICICI Bank. The money raising will give cushion to them for any kind of eventuality in case things do not go right way. And in fact, they would be able to grab the opportunity also as and when it unfolds. So I think it is better to put money. If you look at their balance sheet, also they have less moratorium compared to PSU banks, where you see that the moratorium is as high as close to 25-30%, whereas in the case of Axis Bank or maybe Kotak Bank or in the HDFC case, the moratorium figure is quite less, which gives you kind of a confidence that the things will not be much in case economy goes for a toss or things goes for a toss. These banks will be having less delinquencies. So I think it is better to stick with the private sector banks.
Okay. All right. That's the verdict then on the query that we had from Sahil Parekh from Mumbai. Moving on to the next email, Harshal Koradia has written to us. He's also based out of Mumbai. He wants to invest in Snowman Logistics. He wants to understand whether right now is a good time to enter into it. Will vaccine and medicine related news also benefit the company? But before we talk about the fundamentals and valuations, etc., and the future prospects, let's talk technicals. Kunal, Snowman Logistics has seen a good run up over the last 1 month, and right now at close to $40, it's almost nearing its 52-week high. Do you see the upward trajectory continue? Will it be a good time to buy, or do you foresee dips where he can perhaps look at investing in?
So I think the stock chart, yes, in the last 5-6 months it's seen a recovery, as we've seen for many of these other mid cap names as well. But whether this is a stock which by its own or by the weight of the price performance could really lift and start a new uptrend for itself, I think I'll have my own doubts, because currently in the last I think 5-6 years from 2014 somewhere, the stock had just about gone through a downward drift. Now, for the first time, it's trying to challenge back, one of its major resistances, which I think is at 45, 46 levels for Snowman. So yes, you can probably expect that the stock can, continue to move up higher. But then, expecting that the stock will continue to move up in a fashion in which, to try and reverse the sell-off, which it had done the last 5-6 years, I think that would be too much, asking for. So I think the prospects for Snowman should be purely from a short-term trading view, and especially I think if your view is that the uptrend in the markets overall remains buoyant. So till the time the markets will do good, till the time the mid-cap stocks will get favoritism from investors as well as institutional players, then I believe that stocks like Snowman, etc., can continue to move up higher. But if there is any kind of a reversal or of trend in the markets, then many of these stocks which have just sprung up off late, they would be the ones which would be at the brunt of some sharp selling pressure. So you have to play in a bit of a, I would say, cautious note rather than going all out into stocks like Snowman Logistics.
Okay, thanks for that, Kunal. So Kunal's a bit cautious given the history, and it seems that counter is also approaching a critical resistance, which means that it might take a U-turn if it's unable to overcome that. But Saurabh, coming to you, fundamentally, do you find anything wrong or perhaps extremely exciting about a Snowman Logistics at this current juncture?
Logistic company in India. If you look at the June quarter's number, there has been decline in the revenue because of the lockdown, but they have seen good expansion in the margins, close to 500 basis points. There is a good demand for cold storage warehouses. They have been focusing on the pharmaceutical sector. In the last 2 years, the contribution from the pharma sector has now been close to 14% of their total revenue. They have dedicated warehouses in Mumbai and some other regions, and they plan to expand more in the pharmaceutical sector. So I think things are turning up good for the company. I am a bit optimistic. I think the company may do well in the near future.
Well, there you have it. That's the verdict coming in on Snowman Logistics. So on that note, thank you, Kunal, as well as Saurabh, for joining in and helping our viewers out as always. Before we slip into a break, here's getting you a very, very insightful excerpt from our conversation with Big Bull of the Lal Street, none other than Rakesh Jhunjhunwala. Our managing editor spoke to him about sectors that will outperform over the long haul. Here's what he said.
That when the economy does well, right, it is anybody who has a deposit franchise who will survive and grow. Because how can you lend if you don't have a deposit franchise? So if a deposit franchise, so therefore I feel the public sector banks also, some parts of them will do well because they have good deposit franchises. So it's only a man who can garner deposits who can lend. So I don't think those banks are going to easily see. Consolidation is a natural process of economic evolution and growth. So that may happen, but not necessarily they will lose market share.
What role do you think technology will play? I saw a tweet from Uday Kotak. He says, look, the future of the world is with fintech and banks which have technology and platform. Should we brace ourselves for that?
Well, I think most banks are already using the technology which fintechs are using. Today, I can open a bank account without going to anybody from my house. I can get a loan sanction from a bank sitting at my home. So I don't know how fintech is different from a bank. Please ask Mr. Kotak.
Now, pharma is the only sector, Mr. Junjunwala, where we've seen a EPS expansion and a P expansion. Is it a coincidence that it has only happened after the COVID crisis?
I don't think the COVID crisis has caused the P expansion or the EPS expansion. But I think I don't think COVID has caused it. It was overdue. I'm shouting from 2 years. I was 2 years early.
Welcome back. You're still watching Buy Now, Sell Now right here on ET Now. Before we proceed further in the show, just a quick reminder of the BNSN quiz, the daily quiz that we've been getting for all our viewers. And today the question is, which of these FMCG majors posted the highest volume growth in the last quarter? Your options are A, HUL, B, Nestle, C, Britannia, and D, Colgate. So you still have time, perhaps the next 15 minutes more, to post your replies on our Twitter handle, and we will feature all the winners' names by the last segment of the show. But let's talk about some stocks making news then. We have TCS, which is flying in trade, up good 5.5%. They're looking to consider a buyback on the 7th of October. The tech giant is all set to come out with its earnings this week as well. Poonam joins us to fill us in with everything we need to watch out for.
Well, TCS indeed has stated that the board would be considering share buyback along with the results on October 7. To note that the last time TCS had done buyback was worth rupees 16,000 crore at a buyback price of nearly around 2,100 odd crore per share. And this buyback, in fact, is fairly in line with the stated policy, wherein they have stated that TCS, in fact, shall return 85% of their annual profits either in the form of dividend or by way of buyback. As of Q1 FY21, TCS has a cash balance and investments worth nearly rupees 39,500 crore and a net worth of nearly around 84,700 odd crore for FY20. A buyback worth rupees 26,500 crore would in fact imply a dividend payout of 90% for FY21. IDBI Capital in fact states that if you look at the two previous buybacks, both of them were worth 16,000 odd crore, one in 2018 and another in 2017. As per analysts, like for instance, as per IDBI Capital, they state that this time also the expectation there could be a buyback worth 16,000 crore and a total payout of 23,000 crore, including the dividend payout as well. And as per the previous buybacks, Tata Sons probably may also participate in the buyback. So yes, a fairly interesting development coming in from TCS. We should be watching for more details on October 7th.
Okay, thanks for that, Poonam. But keeping it with the IT index, it has currently hit a multi-year high. And is the sector perhaps set for a re-rating? Ajay Sharma caught up with Abid Neemuchwala, who's a venture partner at Dallas Venture Partner, and he's the former CEO and MD of Wipro, to understand what his outlook on the tech companies are amid these uncertain times of the pandemic. Let's listen in.
No, it has been very interesting because technology, what we all called as digital transformation, the next wave of adoption of technology across enterprises, across all businesses, was happening. But it was happening at a relatively more gradual pace. Things that would have happened by 2023, 2025, because of COVID, got highly accelerated. And the reason for accelerations are two primary reasons. Reason number one is that a lot of change management is required whenever you bring a new technology in. And consumers and users of the technology who need to undergo a learning curve because of COVID, because of personal reasons, people underwent that learning curve very fast. So just as an example, I have a 85-year-old aunt and a 90-year-old uncle, and they have never used a computer. They started doing Zoom and telemedicine with their doctors almost within the first month of COVID. By April, they were comfortable talking to their doctor over Zoom. So the adoption of technology by consumers became faster, and that is why the acceleration to digital transformation happened much faster. That is one. Second is just the survival of certain businesses. by adopting digital transformation, restaurants are a very good example. Restaurants who evolved an entire model of curbside pickup, home delivery, being able to order online, pay online, having a menu online, are things that restaurants were very slow at doing it. Eventually, they would have done it in 4 or 5 years, but they were able to accelerate it. Retail, you go industry by industry, and they have adopted technology. So both of these things coming together in COVID has accelerated digital transformation by almost 3 to 5 years. And that has resulted into the attraction towards new technology, new startups, existing technology firms who are more futuristic, having a much more attractive valuation in the market. And the consumption has increased significantly, which is all reflected in their results, as well as it is reflected in how the market is viewing them.
Right. Right. We recently saw HCL Tech come out and give out higher guidance. Commentary coming out of Accenture also seemed to be suggesting high growth which lies ahead. How are you analyzing commentary coming out of some of your friends who are running these large companies in the industry? Do you think this growth momentum, first of all, do you think that there's genuine leap in growth which is happening for companies? And also, do you think this trend is more durable, this is more structural than we've seen in the past?
Yeah, so speaking in general of the IT services industry, I think, thumb rule is every dollar that enterprise spends on buying technology. Today, that technology could be buying a cloud technology, for example, adopting cloud. There is anywhere between $2 to $4 of services revenue which accompanies it. So since there is such an acceleration in adoption of all of the new technologies, whether it is cloud, whether it is artificial intelligence, whether it is blockchain, IoT, any of these new and futuristic technologies, the accompanying services revenue is going to accelerate as well. And that is why I do feel that in the medium term, there will be a certain amount of increase in demand. And hence, my optimism is high of the IT services industry. Also, along with that, what has happened is most of these IT services industries were undergoing a transformation, trying to move from legacy to digital. And COVID, like for every other business, has also accelerated that transformation, that reskilling. People say never let a crisis go waste. And companies have, for the most part, used this time to be able to invest in their people, to be able to reskill their people, to be able to create intellectual property that helps them deliver in the new post-COVID world. And both of these things coming together, I think we'll see a structural shift in increased demand. And there is always a pent-up demand. Whenever a crisis happens.
Okay, let's keep it with some more stocks that are buzzing in trade or that are making news in today's session. First up will be Dr. Reddy's. Well, the stock is a bit lackluster, I would say, trading about 0.5% higher in trade. But if you look at the developments, it's definitely an important one to watch. They've launched generic Kuvan in the US market. The launch was expected as per the settlement agreements with the innovator, and Kuvan is about $490 million product in tablets and powder for oral suspension. The product is essentially used for the treatment of phenylketonuria, which is supposed to be an extremely rare disease. Generic competition is expected to be limited as there are only 2 filers at this point in time. So yes, an important development coming in for the pharma major. Dr. Reddy's very much in the limelight.
Okay, thanks for that, Karanya. Another one that's hogging the limelight today is Vedanta. Q1 results were out. We all know there's a delisting on the cards, and there's a lot happening specifically with the coal business. So let's go across to Mabina for more.
Well, let's start with Vedanta, which delivered its first quarter numbers over the weekend, and it was not a bad set, especially when one looks at the EBITDA, which, led by the aluminium business, did really well. Though, of course, there was that dip of 25% on the top line, which came in at around 15,973 crores. EBITDA was down 23%, and margins roughly came in at about 25%. The profits attributable to shareholders as well fell in line by 24% odd percent. I guess given the fact that we are looking at the delisting process, of course, for Vedanta, all of these numbers do assume importance. Vedanta's share price has definitely rallied quite a bit since May, when Mr. Anil Agarwal first announced his intention to take Vedanta private. But of course, people are also looking at the book value of Vedanta. So here we have a profit attributable to shareholders at 1,033 crore rupees. Net debt and cash as well is something I guess everybody would be interested in looking at. The net debt did come off from the corresponding quarter, but there was an increase by 16% from the previous quarter. But interestingly, the net debt to EBITDA ratio did not surge very significantly. It was at 1.2x, though still it's one of the highest we've seen in the recent years. Cash and cash equivalents at 33,781 crores. And we did see a 3x surge on other income or interest on investments because of MTM gains. Other operational highlights, and like I mentioned, it's all about the aluminium business. The EBIT over there came in at 848 crores versus a loss in the corresponding quarter. Oil and gas, meantime, was a bit of a disappointment because of not just the lower oil prices, but also because of the shutdowns in production. Remember, last year as well, we had seen Vedanta take a hit on oil and gas. But very quickly, Coal India, well, I think things have come full circle over there, because after reporting the lowest ever volume in April, now Coal India has reported the highest ever volume in September. And interestingly, it's from two of its biggest subsidiaries, and I guess one of the most profitable ones as well, MCL and NCL. So, production and sales grew by 32%. But again, mind you, this was also due to a low base because in September 2019, we had seen monsoons, etc. that did hit production. But, nevertheless, there has been good growth in September, and the expectation is that while on a year-on-year basis, for the full year, April to September, there has been a dip, Coal India will be able to recover from here on very smartly.
Thanks for that, Mubina. Let's get you some fresh ET Now insights as well. After a spooky September, is it going to be an October fest for the bulls? Let's find out. Jayesh is standing by with all the key market trends to watch this month.
Historical data shows that the month of October could actually be very good for the bulls itself, because if you have a look at the frontline index performance, that has been quite robust, with the Nifty gaining more than 1% on an average basis during the last 5 years, and the Nifty Bank also surging almost 2% on an average in the last 5 years. But it's the broader markets that have performed really well, because the Nifty mid-cap index has surged more than 3.5%, and October traditionally has been the best month of the year for the Nifty mid-cap index. Similar is the case for the Nifty small cap as well, which has risen as much as 4.5%, and once again the best month of the year has been October. And similar is the case for the other sector indices as well. Let me run you through one by one. The Nifty PSU Bank Index has surged more than 8%, while the metals pack have risen more than 4%. And then you have the Nifty Infra along with the energy and the real estate space that have given you more than 3% apiece. And then you have the Nifty Auto along with the Pharma Index that has risen more than 2% on an average basis in the last 5 years. Moving on to individual stocks, if you have a look at the gainers, the Adani Group has really stood out, because you have Adani Power, Adani Transmission and Adani Enterprises, which have surged about 20 to 30% each. And then you have Coromandel International along with IDBI Bank, which have also surged double digit for the month of October. As far as losers are concerned, not many stocks over here, but you have one large cap name that really stands out, which is IndusInd Bank, negative 5% for the month of October. And then you have the likes of VA Tech, Wabag along with Repco Home Finance and Oracle Financial Services, which have also declined in the month of October during the last 5 years.
Time for a break on Buy Now, Sell Now. Be back shortly. Hello, welcome back to Buy Now, Sell Now. It's now time for the quiz and the quiz answers as part of our BNSN Quiz Connect initiative. We have a lot of people who responded to us today. The question we had for you guys was, which of these FMCG majors posted the largest or highest volume growth in Q1 FY21? So just to clarify for you, specifically volume, so the turnover might have declined, but the volume might have been higher. So today's winners who guessed the right answer firstly, which was Britannia Industries, are Kasula Vamsi Krishna, Jay Shan and Nilesh Chawan. So congratulations to all three of you on getting the right answer, and we'll be posing more of these questions to you daily, so do keep your interest alive. But switching gears now to the auto sector, we have Karanya, who's actually back with us, and she's going to walk us through all the fine print of the September auto numbers. Over to you.
That's right, and the momentum clearly is continuing even in the month of September. Ever since the phased unlocking resumed in the month of May, we've seen a very, very solid and a very sustained recovery across all the key segments, especially if you look at PVs and two-wheelers. Inquiries have really gone up. They've seen good bookings as well. Inventory build-up at the dealer's end is something that has really pulled up the volume numbers as well in a big way, given that the peak festive season is going to now happen in the month of October and then November. As far as rural rebound and recovery are concerned, they're going very, very strong. There's very good, rabi crops which have the strong kharif yield, which has really aided the farmer sentiment. Kharif sowing has been way better than expected. Monsoons have been very good. Financing situation has improved on the retail front for farmers and for dealers as well, in fact. So these are some triggers that continue to stay very strong, especially for the rural segment, which has really helped tractor volumes once again, and they've seen a very, very sharp improvement, especially on a month-on-month basis. CVs also finally are starting to witness some green shoots on a sequential basis, but yes, it seems like there's still a long way to go as far as CVs are concerned. The near-term outlook still looks pretty bleak as far as the commercial vehicle segment is concerned. Fleet operator profitability has also worsened. There are still challenges over finance and weak economic activity, which should actually, according to investors, continue over the near to medium term, and it will impact the volumes even in the second half as well, whereas a lot of brokerages and analysts believe that overall when it comes to two-wheelers and passenger vehicles, volumes will start meaningfully improve in the second half. So let's see how that plays out. Right now, ahead of the festive season, we're definitely witnessing continued strong trend and green shoots visibility. Earlier in the day, we also caught up with the management of VECV. Let's understand and let's listen in to what they had to say with respect to the outlook and the demand situation.
So look at the CV industry, month after month, the industry is improving. For example, the month of September was better than August by 40%. However, if you look at overall numbers, if we exclude the small commercial vehicles, overall numbers for the commercial vehicle sector in the month of September was just around 18,000. Now this is against normal, if you look at 2018-19, the average numbers were 45,000. So against 45,000, we are still at 18,000. And overall first 6 months, excluding the small commercial vehicles, the industry size is just around 50,000. So the market size per se is very, very small. Even though we are looking at the improvements happening month after month. And since the last year second half was very low base, last year second half, excluding small commercial vehicles, it was only around 150,000. So I see that second half this year will be better, and even it will be higher than last year's second half. Because last year's second half, it is 150,000, which is around 25,000 a month. And with the festive season coming, I expect that the industry will be on an average more than 25,000 per month.
When will you go back to 2018 levels? Because pre-COVID, frankly, for an industry which, like you said, was already going through a slowdown, is not the correct benchmark. Yeah. If I compare October 2019 versus what the expectations for the October 2020 would be, that's also an unfair comparison. So I'll have to go back to 2018 levels where there was no economic slowdown and where there was no pandemic-induced slowdown. When will you go back to those levels?
If you look at the overall historic perspective, 2 years back when the axle loads payload norms were increased, that was one reason of the drop in the industry last year. And then, of course, there were a lot of retail financing constraints. However, after this BS6, I think as far as the payload norms are concerned, the design of trucks have been improved. So now the new trucks, BS6 trucks, they are better equipped to take on the additional payloads. Similarly, I think retail financing, even though still it is a concern, but then that concern is, I would say, it's coming down day after day. Now when it will go back to 18-19 levels, I think that depends on how fast the sentiments become positive. Because the good thing is that last 2 years, the replacements have not happened. If you look at this industry driven by replacement market, for example, every 4 to 6 years, the trucks change hands. Like the big fleet operators, they replace trucks every 4 to 6 years. However, last 2 years, like if you look at 1920, the industry had dropped 40%. That is even before COVID. And this year, again, the industry is very, very low. So therefore, the replacements have not happened. So there is a lot of pent-up replacement demand. Now, when the replacement will start happening, that depends on when the sentiments become positive. Now, positive thing is that the sentiments are becoming positive now. And we have seen very bad GDP numbers in Q1. And Q2 are also expected to be negative GDP. But going forward, I expect that Q3, Q4, we will have some, maybe Q4 will be positive, Q3 may still be negative. So therefore, if the sentiments become positive, we start seeing the replacement demand. And if we look at the infrastructure sector, if the government keeps on pushing the investments in infrastructure sector, and then of course there are some other positive signals, for example, e-commerce sector demand or demand coming from the rural economy. I think these are all the positive sectors, positive sentiments. So therefore, I expect that the things will start improving now on, and maybe next 2 years, it may go back to 18-19 levels.
Okay, we have some very important updates from the GST Council meeting, and it seems that they'll be extending levying compensation cess beyond June 22. But Ruchi is with us. Hi, Ruchi. What have they decided, and how is it going to impact the various stakeholders?
Well, absolutely right. It is almost an hour ever since the GST meeting started. Remember, this was a meeting where we were keeping a close eye on the kind of fireworks that were expected, given the fact that states had to decide which of the two options they will go in for, even as the opposition states may push for a third option and may also seek a dispute resolution panel. Now, we at TT Now were given to understand that one of the items in this meeting was the extension of compensation cess levy beyond June 2022. I'm given to understand the council has given a go-ahead, has given a green signal to extension of the compensation cess levy beyond June 2022. This will enable and make sure that all the money that is collected on cess, the government had proposed, remember, that the cess can now be extended for a period of 2 more years from the existing 5 years. That time frame was getting over to about 7 years, and that is how the interest payment would be made for the 2 borrowing plans that the government had undergone and was talking about. I'm also given to understand that the centre has also told the council today that they have planned to raise the borrowing for states under special window from existing 97,000 crore rupees to 1.1 lakh crore rupees as well. And this after various states had highlighted the incorrect GST revenue growth estimates as well. Besides that, the other issues, the opposition states are likely to talk about which are the 2 options are they okay with, and if they're not okay with either of the options, what is going to be the way forward. The issue of the nod for IGST dues disbursal of 24,000 crore rupees to states is also likely to come up, as we already know. Sushil Modi-led GOM had favored the centre transferring the unpaid GST dues to states. So all these issues will be taken up in today's meeting. Expect fireworks on the issue of the borrowing the borrowing that states will have to do, because many states are still not okay with that proposal. So it needs to be seen how the center is likely to bring the states in their fold, if at all there's going to be any sort of voting on the issue or not, because this is going to be very, very critical. We have seen in the past voting happen on the issue of, the GST rates for lotteries. So needs to be seen what is going to be the way forward. Finance Minister Nirmala Sitharaman will be briefing the press at 5:45 this evening. We'll keep you abreast of the developments from there.
All right, Ruchi. Thanks much then for joining us with those details. We're timed out on this edition of Buy Now, Sell Now. So we're going to wrap it up right here on the show. Thank you for tuning in.